This is, as you said, Wilfred, earlier, one of the most important treaty commitment the United Kingdom is making since the Second World War. This is very, very important is an understatement. And the fine print and the detail in it will be critical. So any presuppositions right now as to whether or not it'll be supported by a cabinet or how the parliamentarians respond is candidly premature. We're all expecting what would broadly be described as a soft Brexit. That's really been widely leaked and discussed. The real key issue is the detail around the backstop agreement relating to the Irish border, because if the backstop agreement doesn't have some time limitation on it, or the ability of the UK government unilaterally to give notice on it at a future date, then she will have a problem, because the perception of her cabinet and the parliamentarians may well be that we're signing up to a deal in perpetuity that doesn't resemble what we'd initially anticipated.
Michael, do you think tomorrow we're likely to see significant moves in either direction for the British pound based on whether or not Theresa May successfully moves forward with her agreement?
I mean, the pound is obviously going to be the litmus test in the short run. I think clearly, if the deal is perceived by the market as being a proper deal that Parliament will support, that her cabinet will support, I would imagine sterling could rally quite sharply, easily to 135, 137. If, on the other hand, it looks like her cabinet is fragmenting and she won't get parliamentary support, then we are yet again moving into unknown territory. We don't know where it will lead us, to be honest with you.
In terms of broader market volatility, Michael, what's your view in terms of what we've seen with the October sell-off, the pickup in volatility? Do you think it's still sort of a little bit soft, the level of volatility, given the challenges that are out there? Can you see VIX and so on and so forth spiking in the months ahead?
I mean, my personal view on markets is that we've seen outside of the US a clear peak in global equity markets, in Europe and particularly in Asia. The US has held out extraordinarily well. The indices are not far from their all-time highs. But personally, I am nervous of US equity market valuations. They are historically high. We've been through an earnings period, obviously, which has been extremely strong, but to an extent that's driven by a very significant adrenal impact of the Trump tax cut. Earnings growth will be much lower next year, and also the rate cycle has changed. And I think, to me, rates are critical here. If you believe US interest rates are going up, which I believe they are, notwithstanding that the economy is strong in the short run, I think equity valuations are under threat.
Michael, you just sold your company next to CME Group. What do you think about the opportunities now for the combined group? Do you think that the market share in trading, your area of expertise, for the big US investment banks has peaked, and that there's significant market share gains to be made by relatively smaller firms?
The CME Next combination is unique in the financial industry, because hitherto what we've had is some very strong exchange groups, CME being the world's biggest, of course, and some very strong OTC businesses, of which Next was one of the biggest. This is the first time an exchange group with big interest rate derivative, commodity derivative capability has bought taken over a large OTC group. They are enormous product synergies, technology synergies, client synergies, and I think this is a deal that will be viewed in the future as an industry changing deal, an industry leading deal, and I think it will change the framework of the markets and the efficiencies that can be driven from a client point of view and from indeed a supplier point of view as well.